this show. We have a special guest presenter, Dougie. He was a little fast on the trigger, started it a couple minutes early, but hopefully everybody's here. Can you see his screen and hear my voice? I hope everyone's been having a great week so far. Excellent. Nice to see you, Mel. Robert, good to see you. Glad to hear you're having a good week. Frank, awesome. See you were able to get in. Yeah, Steve wanted, we had a lot of requests for Doug to continue his education on swing trading, so he is here to do another session. The one housekeeping, we sent out a couple emails. Well, we sent out, I think Lauren sent out an email, and I know she posted in a couple of the Skype groups, just as a quick reminder, because of the whole Brit exit nonsense over the next couple of days, there will be no London pre-markets. Okay, either tomorrow, Thursday, or Friday. No London pre-market. Carr said he refuses to encourage bad behavior, meaning don't trade. So yeah, Carr will be doing the normal DMR session tomorrow night, 7 o'clock Eastern, as always, and next week it'll be regular schedule as usual. But no pre-markets the next two nights. And I mean, already things got a little jumpy. I was just looking at the open. So anyhow, let me shut up so Doug can get going with his presentation. Thanks, everyone. I hope you have a great rest of the week and weekend, and use the time to do some homework.
Thank you so much, Joe. All right, can everybody see my screen and hear my voice? Well, you already answered that you can see the screen. Can you hear my voice? Yes, yes, yes. Mel, how's it going? Ray? All right. Yeah, I didn't realize I started a little bit early. Hopefully some more people come in. Not a big deal if they don't. It is being recorded, of course. So I'll just get started on the standard disclaimer. I'm sure you all know it by heart by now, but in case you don't, nothing presented in this webinar or video presentation, whether vocally or visually, is to be taken as trading advice, okay? It may seem it, but it is not trading advice so much as it is education. All content of this video presentation is just for that, educational purposes only, in hopes and dire wishes that you then take this information, go back and apply it to your charts and see for yourself, okay? And of course, your participation in this webinar by not clicking out. You say, hey, Doug, I agree with what you just said. All right, so moving on, what is this? Well, we're going to get back into the swing presentation, the swing trading, okay? This is part 3. Now, I gave a lot of information in the first 2. I tried to condense pretty much everything that I had studied in the past year and a half doing the Swingers Club and all my higher time frame study into 2 sessions. I didn't realize I would have the opportunity to do more if required, and of course they were more than happy to let me come back in and talk to everybody. I'm going to be doing, I think, 4 over the course of the next couple months. I think we're going to be skipping 3 weeks in between to give you folks time to do the homework, to take this stuff and go look at your charts and see it for yourself. Okay, now just a little caveat. Hello, Jeremy. This is swing trading. Okay, now I've been getting some messages, some emails, some Skype messages. But what about this? And why wouldn't you do this? And oh my God, that stop loss. Look, this is swing trading, and primarily it's there. You want to know why I'm doing this? I mean, I'm doing this for myself because. Well, I mean, I'm doing the swing trading for myself because I realized I was getting in my own way too often by watching the 15-minute, okay? Sitting in front of the computer watching the 15-minute. I went down to the 5 and the 1 years ago. I realized that was just a big mess. And then finally I hit this point where I said maybe, even though I'm impatient, maybe it's simply because I'm looking at the wrong time frame for my personality. So a lot of people have been emailing Steve and, you know, talking about, you know, I need to swing trade. Why? Because there's a lot of people that are working 9-to-5s. They own their own business. They got families. They got kids. Okay, so you got to remember, think in context of what we're talking about here. Think in context of, I may not be sitting in front of the computer. Okay, a lot of people listen to what I say about this stuff, and then they get all upset about, well, why wouldn't you do this? Why wouldn't look? You could do this. It's not about what you could or couldn't do looking at the 15-minute. It is about allowing yourself the ability to look at your H4 and your H1 and even your D1 and project out and go, okay, you know what? From all the stuff that Doug's talking about, and all the stuff that Steve and Jim and Carr have taught me about the levels and the harmonics, and now Doug pointing out these confluences and what to wait for, how to look at the larger structures, I know this is coming back here, and it'll probably happen on Monday. It's now Tuesday. Let me draw a box. I don't have to worry about it. I'll look at it once a day, but I don't have to stress the hell out over this stuff because I got a job and kids and all those other responsibilities. So I want you to keep that in mind, okay? I probably should have got rid of these little animations. Okay, so tonight we're going to take it easy, and we're just going to talk about the setups and patterns. Eventually I'm going to be talking about how to handle your larger structures, your variations of the market maker cycle. And when I say larger structures, I'm talking stuff that's a week wide, a month wide, 3 weeks wide, sometimes 4 months wide, how to be able to recognize these larger structures on the 4 hour and how to know they're being set up on the 1 hour as well. But in order to trade those, you need to know what patterns and setups that I primarily look at and what I find to be the easiest to spot and just the most predictable and highest probability, okay? Kevin's saying amen. So that's what we're going to do. We're going to start with the setups and patterns. Then the next presentation, I'm not sure which one it's going to be, but look, we're going to be covering how to handle trend versus range bound, which I talked about in my first two. And look, if anybody is like really confused about some of the stuff that I mentioned, do not worry about it. I use a lot of abbreviations, but I tell you what they mean. But I use it for shorthand because I put all this stuff on my homework, and you'll see what that looks like. So don't worry about, well, how do I do this stuff in the trend? I'm going to be talking about trends, consolidations, how to handle your failed peaks or your resets, what to look for to the left to let you know a reset's coming, and on the TDI. This kind of stuff is going to be coming, but you need to know the basic setups, the confluences, as I always talk about. So let's get into it. Now, first off, just so you know, none of this stuff it's not revolutionary. It's not, it's all stuff that you've seen before. I just want you to kind of think about it in a different sense. Not even really a different sense. I want you to line all this stuff up. A lot of people jump the gun on these patterns and setups, and the more you see them with all the confluences I'm going to be talking about, the more confident you'll be in just like, waiting for that 1 hour shift candle, and the more you study these and line up, the more areas of interest and confluences and stuff that you line up, you're going to be confident in just taking that 1 hour shift candle instead of like trying to hunt it on the 5 minute and the 1 minute because you're looking for 30 pips. Okay? So that's what, that's really the idea behind all of this. It's not, there's not some crazy new like rectangle pattern or some, inverted flag that I'm going to be springing on you. It's all the same stuff you already know. So sit back, relax, and enjoy some charts. Okay, so what are the setups? We got peak formation, and we have M's and W's. All right, had to move the questions out of the way there. Yes, I was pushing too hard on the M5 and M1. Yeah, and I understand. I did it too. Some people are really good at that. There's nothing wrong with the M5 and the M1, and I will admit, while I do swing trading, I will go down to the M5 to hone in some of my entries, but primarily I'm looking at the H4 and the H1, and I know, okay, the second shoulder is coming in at XYZ point, and I'm going to now watch it, but I have the freedom to sit there and do that. But what I'm going to be showing you with the shift candles and the patterns and the TDI and the H1, hopefully you can breathe a sigh of relief if you're one of these people that has the limited time in knowing that I don't have to do that, Okay, so the P formation and the safety, those are going to be our primary setups. Now the setups are just the conditions that we're looking for. You know, the part of the cycle, the part of the market segment, the part of the structure. Okay, I don't want you to get that confused with setups. All right, or patterns. Sorry. The patterns, you know, are the M's, the W's, the half a bat, the 12, 22, all these these patterns that we now have with nameable legs and the confirmation. Those are the patterns. But the setups, we got P formation and safety primarily. Okay. We also have reset and continuations, and that's to be discussed at a later date. But those primarily, again, P formation and safety, they're just in a different context. Okay. So, and you're going to find out they're pretty easy. So, just again, breathe a sigh of relief. Okay. The patterns, little cough there, hold on. The patterns are primarily M's, W's, and head and shoulders. This is what we're going to be looking for. Very simple. Like I said, nothing new. There we go. Areas of interest, okay? And this is where it starts to get a little bit like, oh, okay, what is this crap? It's all stuff you know. I discussed the quarter points in my original one. So yeah, please, and watch that. But basically, it's every 1,000 pips broken up into 250, 500, 750, and your 000. It's just 250 pip increments. It's kind of like the sweet spots on a macro level. Okay. And I use the sweet spots with just the 00 and the 50. Okay. Another area of interest, I call it the retail trader trail of tears. Okay. It's where market participation has gotten people into trouble. Your trap volume, and also where stops and pendings are placed. You know, your zone flip areas above the trap volume for your pendings. It's basically looking to the left and saying, okay, where's the last place people got screwed? And that's a very big part of my chart vision. TDI, an area of interest, is just your overbought, oversold, and your upper and lower bands, depending on the phase of the market. But in any phase, your upper bands are definitely always, you know, prime areas of interest. And of course, your EMAs on the chart. Ooh, it's heading towards the EMA. It's heading towards that 200. Okay, we've been up 3 days, and it's about to smack into that 200. Let me project out and wait for that second leg, that kind of thing. So the actual confluences, you know, the confluences is everything obviously put together, but my main ones, I want all those areas of interest. I want to be focused on those areas of interest, but the confluences really are those things happening while I see a head and shoulders on the TDI. Am I seeing what I call chopstick divergence? You've heard Carr talk about it. You've heard me talk about it if you attend the Sunday sessions. Baseline bounce, that's been getting some more press as of late. Shark fin at the bands. We all know the shark fin at the bands, but also a shark fin at the fixed 50 and the baseline. Okay. And you'll see things on my chart like SFBL, shark fin baseline, you know, BLB, baseline bounce. So, and of course the structure components, the midweek reversal, the false move week beginning, okay? I forgot to put on here MOS, the middle of structure, because the middle of the structure, we forget that, you know what, the first leg of a larger structure can happen on Wednesday as a midweek reversal, but then we get the middle of the structure, the larger structure. Let's say it's a W. We get the first leg on the Wednesday. It comes up, nice 3 big bursts, and it traps high on Friday, pulls back. But on Monday, okay, it comes up, gives a second leg, and then drops. Now we have a middle of that structure, but it occurs on Monday. But it also gives us a false move week beginning, okay? And, of course, the second leg of the second shoulder of a structure. Now, these are just, once you put them all together, your area of influence, your confluences that are falling in line with price being at an area of interest, okay, and your setups and your patterns, then you get your combos. Are you in a particular, are you at a stage of the market where there's a particular setup occurring? Is there a P formation happening? Has a P formation occurred? You weren't looking at a pair, you weren't watching a pair, but for some reason now you're looking at Swiss yen, and you see there's a P formation, it's anchored. Okay, we're in a possible safety trade setup, okay? Setup area. Is a pattern in play? Is it at one of those AOIs, and better yet, multiple areas, okay? The TDI isn't oversold. You're up at the price area of trap volume to the left plus a quarter point. and are there the other confluences that aren't actually areas but things that are occurring on the TDI? Is it part of a structure? That kind of deal. Are they just sitting there screaming at you? All right. So that's your ultimate combo of just boom, you have all those ticked off. Okay. Now this is some of the stuff you might see on my charts, not tonight, but in the future. Okay. But it's fairly intuitive, at least I think. Some of them are ridiculous, so you can make fun of me. I get it. But let's say you have a head and shoulders. Okay, the head and shoulders is actually on the second leg of a larger structure. Okay, your head and shoulders is your H1, right? And we're going to get to chart examples real soon. So I know I can talk with some slides, but we're going to get to the chart samples. Okay, so you got a head and shoulders on the H1, but that's also, that head and shoulders is actually the second leg of a larger structure. You go to the 4-hour, and you can't really tell too much. It's like, oh, okay, I see a second leg, and that's obvious, but then you go down to the H1, and it turns out it's a head and shoulders. But it's also occurring 50 pips above the quarter point. That's a big one for me, okay? They trap at the quarter points, but they also trap 50 pips above the quarter point and below the quarter point. They'll move down to a quarter point where they'll stop 50 pips above that quarter point, or they'll shoot up to a quarter point, and they'll smack 50 pips above it. Okay, and I believe I think Jim calls it trap through. I just use 50 above QP like there. 2 pins to the blueberry. It also happens to be a midweek reversal, and hey, there's classic divergence. Okay, that's a nice group. Then you look at another pair. You got a second leg, false move week beginning. Those are fantastic. Some of my favorite. Turns out it's also the middle of the structure. It's at the mayonnaise. There's trap volume to the left. Okay, there's hidden divergence, which is all part of a reset, continuation trade during a trend, and it's at the QP. Well, that's fantastic. I'm in, all right? Head and shoulders at middle of the structure. You're mid of the structure of this large structure, this 2-month or this 2-week structure, this 1-month structure. Wow, the middle is a head and shoulders. But it's also turning out to be a midweek reversal. It's happening on Wednesday or Thursday. Okay, there's 3 bursts up into that first leg. It's occurring 50 pips below the quarter point. It's at that first sweet spot below the quarter point. All right. Also, I'm seeing chopstick divergence. And man, if that second shoulder isn't also giving me a baseline bounce, these are fantastic setups. Okay. On to some chart examples. All right. Take a look at this. I'll move those questions out of there. Okay, so this is one of the things I'm talking about. Okay, we have multiple hits over here to the quarter point. Now, any one of these, really, if you're looking over here, could produce some sort of drop. Okay, we don't get much because they're working that. If you look over, that's a 000. They love working their 000s. They hit it again on Thursday. They drop. We see 3 bursts down. Even actually maybe one more. They smack into that quarter point. They shift away. They give you a small W. This is the middle of a larger structure. This is what I mean, a larger structure. You can see the market maker cycle in there. I've called it a 3x3. I believe Jim calls it a benchmark now. It's the market maker cycle. It's part of the larger structure. What I see, if you look on the 4-hour, you're going to see a nice M formation. Okay, when this is the goal that you want to achieve, or the level that you want to reach, when you're seeing this. And you know it's coming back up. Not to jump in here. Again, Doug, audio sometimes cut out. Probably when I was moving stuff around. Let me click there. Hopefully that's better. If it happens again, just let me know. Someone said okay now. Okay, so again, if you're one of these people that has no time to be in front of the computer, you come to the computer on Friday. All right. Gee, I can't sit here and wait for the 50-50 bounce. The 13's over the 50. I can't wait. Don't worry, because if you look back like you should be looking, you can see 1, 2, 3, and then we stop dead and shift away. Okay, projecting forward, I can see the quarter points coming up. Okay, and I have hard right edge cards that we're going to get to momentarily, but I just want to explain this and kind of walk you through my thought process. I'm just going to wait until they come back up into this area. I'm going to draw my box out. I see trap volume out there, and I'm going to wait for them to come back up. Okay? So looking at this close on Friday, they trap high Friday, I'm excited going into the next week. Why? Because, well, now because we're going into the next week and we still haven't hit that quarter point. We still haven't come back up into the trap volume. What can I potentially expect? False move week beginning. Second leg of larger structure, false move week beginning. Yay. Now I'm excited. Okay? They hit, they pull away, they hover at that tracer, and then they just freaking shift. And we can see the divergence on the TDI right at that point. Okay? Now what do? They roll over, they close at the extreme of the structure right there, but they roll over. We don't get a 1350 cross, okay? So it looks like a peak, but then, oh, well, gee, we don't have the 1350 cross. You don't always need it. And then they actually give us what looks like a kind of a staggered second shoulder, okay? So now we're getting a head and shoulders type of pattern, a little safety trade here, AFP kind of action. All right, we see that the peak has been put in. We are trading away from peak. Okay, so they give us a second shoulder. That second shoulder with that shift candle gives us a baseline bounce. Now they come back right up into that area again. They hit the tracer the next day. But if you're patient, if you're using proper risk, and you're able to just, come back the next day, yeah, this might be a scary example. Well, gee, if it comes all the way back, it's bouncing off the mayonnaise, it's bouncing off the blueberry, how the hell do I know? Homework. From doing this, you'll realize that larger structure, that second leg larger structure, trumps the hell out of any of the crap that they're pulling to get you to go back long. Okay? They start to roll over. They hold. Oh, is it going to bounce off of this blueberry? Is it going to shoot back up? Well, you're enough away that from your entry point that you can hold on. Now, if this occurred the next day, I wouldn't have been holding on because we're looking at the beginning of the month in NFP. But this is Thursday. We have the preliminary USD unemployment. And sometimes it produces like that, but I will hold through that as opposed to the non-farm. Now, if I'm that far away from non-farm, sure, I'll continue to hold. But your entry is plenty away, and there's plenty of confluences. We have that second shoulder baseline bounce. The head and shoulders is the second leg of a larger structure. There's a lot of stuff going on, okay? And here's everything mapped. See that peak. There's your entry. Hell, get in again as it rejects the next day, okay? You see your baseline bounces even going back up. That middle of the structure, not sure where to look at the chart. Show more with mouse, please. Oh, I'm sorry. I was moving forward. Yeah, my bad. Okay, well, this is why I had it again. Okay, so we have this larger structure going. This is your market maker cycle, right? Your benchmark, your 3x3, as I call it. Okay, and see, and one of the reasons I'm not trying to confound people with another way, but you know how Jim refers to certain things on the M1 as the microcycle, because you see the 3 down, 3 up. When I was doing the higher time frame stuff, I would see these 3 moves down and up that occurred over like a month, and that wasn't really a market. I mean, it was an H4 market maker cycle, but according to the levels and all that stuff. No, this is a 1-hour chart. Somebody's asked. You can see the days. When it looks like this, you won't see these little dotted lines when it's a weekly. Okay, and you can see these thin gray lines, or these actually, these thicker gray lines. Those are the week end and the week beginning. So this is a full week. Okay. Sorry if that wasn't clear. Thank you for asking, though, Beth. So when I started seeing 3 levels up and 3 levels down on a 4-hour that occurred over like 2 months or a month, I would call them 3x3s. But also, if it occurred, over the course of 3 days, and then it was a reset. So I just started seeing these things all over the place, and I was calling them 3x3s, and then it hit me. I was like, oh, that's what Steve's been talking about. That's the market maker cycle, just in different variations. So if I happen to say 3x3, just know it's part of a larger structure. It's 3 up, 3 down to give you a second leg with some sort of middle of the structure, whether it be a midweek reversal or a false move week beginning. Okay. So even right here, if you got right here, you saw this shift, baseline bounce, right? Second leg, baseline bounce. 2L, BLB. Those are the kind of things I love. I'll take that simply because you had such aggression down. You think people are not going short right there, and they just look how they stopped dead at that 52.50, and then just one little ping and pull away with a baseline bounce. That's the kind of thing that's gold to me. Now, if I miss that, I don't care. I'm not worried because I know they're coming back up. The way that they handled this with this 3 bursts down and then back up, well, technically 4 bursts down, but back up, I'm expecting this second area. I'm expecting them to hit this area. They give me this head and shoulders. I'm in. There's my second shoulder. Look at how that lines up with the baseline bounce. They come down. They're over the baseline. This is where people will panic. Oh, no, I missed it. No, you didn't. Okay? This shift, oh, no, what if you get in here? Okay, there's some drawdown, but if you're using proper risk management, if you know, well, I'm swinging, I'm looking for 150 pips, 200 pips, 500 pips, then does it really hurt me that I'm only, that I'm using a much smaller position in regard to my stop loss? No, you're still using 1%. It's just not what you're used to because the stops can be a little bit deeper. But the more you do this, more confident you're going to be. You're going to realize a lot of times, yeah, they're not coming back. You still got to use proper risk management, though. Don't get cocky. All right. There was something right there I was going to say. Oh, this is also a lot of these patterns. You don't have to be a swing trader. I hope that wasn't misunderstood in the very beginning. A lot of these patterns that I'm talking about, these locks of head and shoulders or second leg of a larger structure that occur as your midweek reversal or your false move week beginning at a quarter point, a trap through 50 pips above or below with the baseline bounce and these divergences. When you have them all line up, that is going to indicate you're going to get a solid move, okay? So you can use this day trading or, swing, whatever. It's just, primarily the topic is swing. Okay, so moving on. Oh, I forgot to put that. Yeah, this is the combo breaker. All right, for anybody that's into the memes. All right, so we're going to take a look at how the confluences line up. How we're going to do that is we're just going to start with a blank chart. Okay, so I'll give you a minute. I want you to take a look at this and think about what you see. Now, this is hard right edge stuff, so it's funny how naked it feels when you just get rid of everything, okay? Now, does anybody, I'm not going to ask you for everything that you see because I know there's a lot of stuff missing, but can I get some directional biases? Okay, I'm getting short. I'm getting long. Somebody said head and shoulders. That's a pattern. I was looking for a directional bias. I would say a little bit more up than down. Up, small L2, up, big L2 down. 12 short. Okay. All right. Somebody did mention one thing. We have a lot of ups. We have a lot of downs. This is a good representation of what actually goes on in the market. Some people are saying like a 12 trade, 22 trade. I wasn't looking for that yet. We're going to get into that, but I want you to think just in terms of like, hey, kind of what do I see? Somebody mentioned immediately going down, then larger time level one up. Okay, we do have some good answers here. Only one person mentioned we're in a downtrend. Okay, now we do see a P formation. Looks like an area of block volume. Yes. Okay, we have a P formation to the downside, right? Looking at the previous week, we have kind of like a 21 trade, an H1 21 trade, right? W that occurred on the Wednesday, and then we had that trap move below there. So that to me, that's a 21 trade. That's 2 legs on Wednesday, and then on Friday we get like a single leg, and it traps long, okay, and then they pull away and they pull back into the range, they close, they gap down, okay. So we do have that peak formation, but now we're getting our rises. And yes, somebody said, looks like an area of blocked volume. Precisely. To the left, there is blocked volume. The last place people got screwed, okay, we had the P formation at the very bottom that we're coming out of, right? Well, how did that week open? That week opened at a high coming up from the supposed P formation of the previous week, and you had people going long, okay? So there is volume trapped there at the beginning of the week previously. I just remembered before anybody yells at me, you're not pointing it out. I apologize. When I'm talking about charts, I naturally, obviously, follow along because I know what the hell I'm talking about because it's my chart, but I forget. I've looked at these charts a dozen of times, so feel free to yell at me. I understand. Okay, so we have that blocked volume, and yes, now we've come up into it, okay? But, you know, maybe we don't see a clear 3 levels or what have you. This is a picture. I don't have the drawing application. Don't worry. We're going to take a look at it. I have more slides. I promise, Joe. Okay. What I see coming up potentially right here, we're on a Wednesday. We have an M formation. We are in a downtrend. And I know that downtrends, or downtrends, I know that in trends, the continuation will, the reset will typically occur at trapped volume to the left. Somebody said, what do you mean by black volume? Trapped volume. People started going long here because they saw this bottom down here. Okay. Someone's yelling point. I'm sorry. When I said an M formation, I thought that was obvious. Okay. We are on a Wednesday. We have our first leg. We have our second leg. Okay. We are at trapped volume. Now, I just want you to see this. And what somebody said, we are in a downtrend, correct? Okay. They will often fail at previous areas of trapped volume. Now, why would they fail? This is a peak. Okay. This is where I look for the larger structures. This is a multi-day structure. I like to see multi-week structures. Okay. So now let's start seeing what the indicators tell us. All right. Actually, this is the completion. Yeah, I wanted to show you the completion. This is the short, and see how they come down to give us that second leg of a larger structure. They come down into this area. All right, projecting out, I'm going, yeah, I'm not really liking this for a 3-day structure. And then they were showing me this potential midweek reversal, and they gave us a nice 3 clear back down. But we're going to go back to the beginning, and we're going to add in the indicators. So we start from the beginning, and now we have the quarter points on there. Okay, so they're trapping at that 32.50, that quarter point. We have a nice hammer. Okay, that's a nice nameable candle, isn't it? Okay, but what else do we have? Oh, let's take a look at the TDI. We have clear divergence, but we're also getting this second leg. We're getting some baseline bounce here. We're down underneath that signal line, and it's clear divergence, but it can't even get up to the bands. It's smacking that market baseline, and this shift has brought it down below the baseline once again, and the signal line. Okay. So we're getting that second tap. And you can see if you're down in the 15-minute, this would be intraday 12 trade, right? This is 2 legs over here plus this first leg here at trap volume to the left. But what else? We're going to add in the moving averages now. Okay, now blueberry. We have a blueberry. We have a shift candle. We're on a Wednesday, potential midweek reversal for a larger structure. We have our trap volume over here, baseline bounce. Let's add in the sweet spots. Now it starts to get a little bit confusing, potentially. I have my sweet spots colored. I think I might actually go back to gray. I originally colored them so they popped at me because I was trying to study the sweet spots, but I wasn't really following them because they were gray and I was getting kind of a snow blindness. But now they can look a little confusing when stuff is really compact like this. Yes, we had the close below the 13, okay? We have some divergence. We have the baseline bounce. We have the moving average moving into that sweet spot, which is 50 pips above the quarter point. Again, I consistently talk about this. I can't shut up about them. When you have a 50 pip below or above the quarter point and you see everything lining up. How do I get those on my chart? Ask me towards the end. It's called the Priceline Grid. It's an indicator, AFP Priceline Grid of Jim's invention. This is the swingers version. It's colored and got rid of the 25 lines, but you can modify the original one to do that. Close below 13, and quarter point. Yes. Okay, so we have all this lined up. We have our areas of interest on the chart. We have trap volume, trail of tears to the left. We have our moving average. We were at the extremes outside the band, and then we had divergence. It comes back in. Market baseline bounce. Nameable second leg with that hammer. Obvious trap. One more thing, just to line it up. Tracer. Now we have the blue tracer. It was obvious, really, once you take a moment to look at it, but at least we have that tracer to let us know. Okay, bam, it just hit that tracer. And this is another good reason to always wait. On the 15-minute, you might have seen, oh, there's my 22. It's a second pin, and on the 15, it might have closed over the 13 or come mighty close. But wouldn't you know it, they break it just by about 4 or 5 pips just to hit that tracer. Okay, confidence. And then, as you can see, there you go. Where do they start the shop? Just short of that quarter point to give you a nice intraday, H150 railroad track. Look at that railroad track, that second baseline bounce. Long wicks to topside also signal price moving down, someone says. Yeah, most often, but when they're in the right context, obviously. But sometimes a pin without context gets a lot of people into trouble. So that's why I'm really pointing out how they're breaking the current high of the day just to hit the blue tracer. All right, let's take a look at this next one. Directional bias, anybody? Most people are spot on. Oh, got a couple trickling in now that kind of got it the wrong way. Okay, now even without fantastic, Joe. But there's several hits to the high. Right, and see, this is where the price can be a little bit confusing, and once we get in the indicators, things will start to clear up. But one of the things someone pointed out is trapped volume to the left, and yes, this is one of my favorite things in the whole wide world. Is the way they will, especially on a news day like that, or a week after, when they have massive volume trapped in a single direction, and then they slowly work their way back towards the pin, because there were a ton of people going long at the top of that pin, and then because it rejected so heavily and pulled way back, of course, people start thinking, well, it's going short. Why? We were in a downtrend prior to that peak formation. Over here. Yeah, some people are like, oh, I didn't see the pin. I know. If you didn't see the pin, because it was right on that day, this was a nasty FOMC day, okay? If you didn't see that pin, okay, my bad. I should have pointed it out. But yeah, there's all sorts of trapped volume, and we were in a downtrend, right? Okay, so how many people went, oh, that was the stop on, that was the big massive pullback, and now it's dropping. So, okay, cool. They got people now piling on short. Let's bring it back up into the trap volume, and let's see what the areas of interest have to say. And the confluences. Fail to break a quarter point, price will go down. Someone's cheating and looking at the charts. All right. We do have a quarter point. Point. Okay. I'm just kidding. I'm not saying you are cheating. I'm just busting chops. All right. They worked their way back up. Okay, we're going into Thursday. We see they hit that quarter point 2 more times, and they finally break it and then shift down. I do see a star pattern over there. It's kind of awkward, but to me that's a star pattern. All right. So they came up into that trap volume and they stayed off of it. and they started showing a double top, and they're rolling back over. Then they finally break it on Thursday and immediately take it away. And what else do we have? Let's take a look at the RSI. Shark fin, okay? We can't even get back into that overbought territory. We hit overbought at the end of the previous week and on Monday, but then divergence started. Finally, we get three candles up, burst, pullback, star pattern. We get a nice shark fin, and a real shark fin, okay? One of those ones that goes out and then back in, okay? Out and then back in. Not one of these that's like, oh, it left the band, so that's your shark fin. No, I mean, bam, out, back in, okay? That's what I like to see. And you see that, if you can look over there, see where my mouse is, that slightly broke the top of that trapped volume. All right, let's add a little bit more. Moving averages, we got that 800, okay? Slowly work that price up into the blueberry, into the 800, and it takes enough time that the blueberry kind of comes down and meets into it. This is one of the things I'm going to be talking about. Would this also be a baseline divergence? Yes, there would be baseline divergence there. I actually wasn't really going to talk about that. Some people just, because baseline divergence is kind of tricky because it can occur in the middle of a trend and then just kind of screw you if you don't know what you're looking at as far as a continuation. But there is baseline divergence there. And for anybody who's like, what the hell is baseline divergence? Baseline divergence is when the baseline starts to diverge from your 50, okay? We have RSI divergence, the classical divergence, and the chopstick divergence, and various forms of divergence, band divergence, but a baseline, when the baseline starts to diverge from the water, okay, notice it's not following it, the baseline can't even keep up, okay, it slope up again, but right as price goes, no kidding, all right, so we do have that, good eye there, Tim. But yeah, that shark fin with the blueberry, there was something I was going to say. Oh, yeah, I'm going to be discussing it at a later time, but I love to see when they hold a level like this. And it's like, well, what do you mean they're holding a level? They're rising, aren't they? They're coming up off of that big pullback. Well, yeah, but they've created this blocked volume. They've created this high and this low, and they're taking their time to get back up there. They took another week to get back up into what they accomplished in 3 hours. They give the blueberry ample time to work its ass down into that trapped volume. So now what do they get to do? They get to come up to that trapped volume, break it by about 10, 15 pips, pick up a massive amount of orders because now they get to close over the blueberry. All right? Look where they would have had to go. They would have had to extend trapped volume by probably about 25, 30 pips. Actually, I think maybe 40 pips if they did that the next day, if they came up and they broke it on Friday. You know, they have their numbers that they have to work out. So they'll hold price a certain amount in order to get the moving averages within a range, within the previous area of trapped volume. So now that they're able to break the moving average and trigger all those algos and the robots and people just manually jumping on, and of course pick up the pendings that all the computers keep above or below the blueberry, so they get to pick up a massive amount of orders with minimal effort, minimal cost to their side. Peak holding, yes. And now we can also see another 50 sweet spot. All right, sweet spot above that quarter point one more time. Nice round number. I have those big red lines going through the sweet spots. All right, so they tap into that 50 sweet spot above that quarter point. This is what I'm looking for. All right. And we see the tracer. All right, they don't just tap it, they leave it, but it's a star. It's a star. It's a 3-candle pattern. They're right back inside of it. Okay. This is the continuation blank. And this is the continuation with everything. All right. Now we can see the 3 clear pushes back down to the quarter point, but again, here's a tricky kind of situation that you'll have to kind of rectify for yourself. because sometimes they will drop down and they'll give you that single leg. Oops, no, just kidding. We're not giving you a level 2 and a level 3. This is why when we get to take profits and how to manage your trade, I'm going to talk about where to take off. Because if you're scaling out, if you're swinging, you should be scaling out. Okay? You should be scaling out at certain points, and we're going to talk about that. But first, you need to be able to recognize all the confluences. Right here. This is the entry, right? This is where we're talking about. This is the pattern. This is all the area of interest, the confluences. We got in over here, and I'm going to be talking more about entries. I just want you to see the pattern. Don't worry about entries or stop losses. If I see a question about that, I'm going to snap. I just want you to see the patterns in the setups right now. So what I'm talking about is, say you entered anywhere in here, okay? We're going to, talk about that later, but you're a funny guy there, Scott. In this kind of instance, this is the kind of thing, this is why we do homework, because some people will get scared out here. Okay, we're in level 1. Okay, cool, it's going down. Oh no, it's coming back. And this is primarily one of the reasons we don't want to do straightaway trades. Of course, if you're only taking 50, you nail it on a straightaway, intraday 50-50, whatever you want to see that as down in the 15-minute. We're not looking at that. But then all of a sudden it moves high on Friday, and you have the option of getting out because it's Friday. It might come back over here. It might give you another hit. Maybe we're looking false move week beginning. But if you're scaling out at certain points and you're at break even, you're not even worried about it, because you've already booked profit, and now the rest is just bonus. Yes, exactly, Marlon. Wow, look at that chart for an easy peak entry. Exactly. This kind of just all this stuff being put together. 50 pips above the quarter point, at the blueberry, to the left, trap volume, star pattern, above the tracer, back into the tracer, high test candle, shark fin. It's just all there, and it's beautiful. All right, got one more. And you all know the drill. Sorry, I'm going to take a sip of my coffee. Let me just mute. Yeah, everyone's pretty much nailing it now, okay? Yes, short, okay? As we see, again, trap volume to the left. This is, in case anybody didn't notice, it's the next week of that previous setup that we just did, okay? I'll go back real quick. Here's our first setup, this peak, midweek reversal, boom, down to this quarter point, okay? So this is where we left off. That was the hard right edge. Come back up, 3 bursts, up in to give the second leg, 2 weeks wide of a larger structure, all right? This is the kind of stuff, remember that very first one, the combo breaker, okay? It had the same style pattern. It's because it's over and over. Larger structure, 3 moves down, 3 moves up into your larger multi-week structure, okay? Again, same stuff Steve talks about. I just want to point out multiple things that occur at those areas that I want you to focus on. Okay, so some people are saying 12 this type of trade. Another star, exactly. I see that as a nice star pattern. Okay, so let's start adding the stuff in. Can anybody tell me what segment of the structure? I know I kind of glossed over it earlier, but I mentioned it in my earlier video. The earlier 2 videos. Remember what these segment structures are, or the structure segments are? Like we have the middle, first leg, second leg, midweek reversal. Anyone want to take a... Okay, second leg, yeah. What else could be occurring? Right, weak beginning, false move, weak beginning. Okay? I had mentioned in the beginning, or I'm sorry, actually I didn't mention in the beginning, but when somebody asked me, is this a 4-hour chart? These, again, are your weekly lines. All right? And actually, I should have just said in the beginning, there's no 4-hour today. I'm going to be discussing that when we get into the trends in the range bound. Okay? So we get what I see here is a second leg, false move, weak beginning. I love those, all right? I see the 1, 2, trickle down, big pullback into this area. I think, I haven't studied as much, but I think this might be considered, one of those 23 trades where level 2 kind of pulls back all the way into level. I don't know. I don't want to misquote it or anything. Okay, but then when we come down, we get this little W here to go back up into a larger M. So now let's start putting the stuff on the chart. What do you know? Quarter point, okay? Add a nice triple number. We'll see that once that sweet spot goes on there. TDI, okay. What do we see on the TDI? This is a very interesting setup, or pattern. Divergence, shark fin, overbought shark fin, inbound, inbands, outbands, shark fin divergence, chopstick divergence. Okay, everybody's pretty much on it. You're seeing a lot of different stuff. I see a head and shoulders. This is Carr has talked about this, the 3 different variations of the head and shoulders, and how, right, somebody's like, oh. Remember, Steve always talks about the TDI, the RSI doesn't fall for the crap that you see on the chart, So the RSI is saying, yeah, you know what, as far as momentum and all that kind of stuff, it's just, it's head and shoulder behavior, okay? So I'm seeing the head and shoulder, but I'm seeing, see the second shoulder, head, or the first shoulder, head, second shoulder, okay? And this gives us a baseline shark fin. And the baseline is pretty much getting up and overbought, oversold. I love those, all right? So now let's move forward a bit. Okay, now we're above the blueberry. Okay. I still like to see that. Why? What did they do? They get to pull that price back down, create the larger structure, and the blueberry gets to move deep below this quarter point. I start to look for when a blueberry or a mayonnaise is in the process of crossing a quarter point, because again, why? They just move this back and forth in a 250 pip range, and it gives plenty of time for the 1-hour blueberry to come down into a range, but now they get to break that and close hard above the blueberry, get everyone excited, get all the algos and the robots and the computers triggering orders, picking up the pendings that get moved along every time there's a candle close right above the blueberry, get people to jump on board. They show you a small continuation, that false move weak beginning above the blueberry. They shift down. Now, they don't close over that 13 yet, but boy, we get that signal line shark fin, okay? I'm not as strict, me personally, with the 13 close over on the H1 entries, okay? This looks almost better than the last one from a TDI point of view. Oh, yes, because here you actually get that extreme shark fin for the head, okay? You get that extreme shark fin right there, and then they come back and do it again, and this one's higher than there, and RSI is like, yeah, we're not having it. Now we add in the sweet spots. We can now more clearly see that they're keeping off of this. Now, in my charts, I would have a box of trapped volume, and you'd see this taps right in to the top of that candle body, and I call these volume bodies. We'll be talking about that. Trust me, we'll get into all this stuff. But here's the pattern: quarter point above the blueberry, false move weak beginning, second leg, larger structure. Okay, this is the stuff I'm looking for. And there's the tracer with that star pattern. All these kind of things. Confluences at areas of interest to get your combos. Now this is the completion without anything, okay? We finally get this drop all the way back down to form out the much larger structure of that first leg. Remember that peak that was over there right before that huge FOMC? Well, gee, where did this come down to? Right there. So you had two larger structures up top in the middle of a larger structure towards the bottom that took an entire month. Fantastic. This is the stuff I look for. Here it is with all the stuff laid on there, and you can see right when they stop there, boom, that's 50 pips above the next quarter point. They're working that sweet spot. They give you head and shoulders, second shoulder. This is giving you a false move week beginning. People think, oh, it's going to continue down. They give you that second shoulder, baseline divergence, sloping up, second shoulder, baseline bounce, it's over. Even if, and this is what I'm talking about, even if you just use these intraday to take, when you see this stuff, and then on the 15-minute you're seeing like a nice little shift candle, and you just take it for 100 pips. Tim, yes, the D1 would also help. We're going to get deeper into that in the upcoming ones when I talk about ranges versus trending, and especially trend continuation. But I just want to give you the overall patterns right now with the confluences, because I don't want you entering on the D1. So I want you to right now, because none of you are trading tomorrow or into next week, hopefully. I mean, Carr even said he's not even bothering looking at the charts till Tuesday. So seeing what you see now with what I'm showing you in these 4 examples, you have ample stuff that you can go back and look at the charts and homework this stuff. Put your chart on the hard right edge and do bar by bar. Use your F12. If you have my homework helper program, you could just use the little tilde backtick key that's next to the number 1 on your home row. That does bar by bar forward, okay? George, you're funny. And someone's pointing out that's nice chopsticks. Exactly. We got chopsticks divergence, head and shoulders, second shoulder, baseline bounce, boom, gold. And if you're scaling out, this might come back down, but if you're scaling out, you're grabbing 100 pips off of this, no problem. Because I'm going to be talking about scaling out at your trap areas to the left, going back into a structure. We're going to be talking about all this, I promise you. But tonight was just supposed to be easy breezy, and let's look at some actual patterns so you know what to go and look for. Okay, I'm going to go to, somebody's asking, please show the chopsticks. I'm going to go to the terminal in a moment. Can I get a time check? Because I got my, oh, thank you, George. Oh, I have one more. Okay, so we'll do this real quick because I'm not sure what my time is, and I don't want to maximize my thing there, my presentation. Yeah, okay. Yeah, people. All right. Right, sure. Let's take a look at it. I skipped something. All right. Yes. Okay. What are we seeing? 3 minutes before the top of the hour. Okay, I'll kind of bust this one out, and then I'll go directly into the charts to show you the chopsticks divergence and take direct questions. Right, okay, and this one's pretty interesting because this looks like a pound-dollar trade I took a couple months ago. Right, good, short. All right. We're missing some stuff here, but what I do see, I see 3 clear moves up, right? And then it's like, well, you know, what's going on? He's stopping right there. It's end of the week. There's no real false move week beginning, okay? But I am seeing a bit of a second shoulder behavior. It doesn't have to be so dramatic. Well, I do see this head and shoulders right here, and then they were just like, yoink, we're going to get you, but right before the day of the close, we're going to do that. We're going to roll over, give a little bit of a pin high, and then shift down. 0 wick, okay? Baseline bounce. I'm seeing the way it's closed over the baseline, and it just comes back up. It's not as prominent if you needed to come back down to the band and hit the baseline, and before you consider that a baseline bounce, that's fine. That's your prerogative. But I'm just trying to show you these little variations that you can look for. But what else is there? Well, not much going on there. Okay. I do see something that I'll discuss at a later time with the 13, but I see baseline divergence. Okay. Wasn't going to discuss that tonight, but I think, what was that, George or Tim? Kind of let that cat out of the bag. Okay, but I like that. I see 50 pips below the quarter point. Well, how can you tell? Each one of these sweet spots is 50, right? How much is it from one quarter point to the next? 250. So if I see 4 sweet spots, four sweet spots equals 200 pips. This just sort of railroad tracked. It's trapped high, 50 pips below the next quarter point, rolled over, and gave me this little pattern with a baseline bounce. All right? This is what they'll do. They'll stop 50 pips before the quarter point. They'll hit the quarter point, or they'll trap 50 pips above. So you're telling me I have a 100 pip range? Yes, potentially. But you're looking for a pattern at those areas, okay? And as someone else pointed out, yes, there is. And I'm going to use these same examples on the 4-hour to show you what else to look for next time we discuss these. But I can see 3 clear moves up. And does anybody see the little market maker cycles in here? Boom, 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 3. This is the only time I'll take a single leg is the middle of the structure. Boom, boom, boom. Okay? Extend. 1, 2, 3. Give you a little mid-structure. The middle of the structure occurs on the Monday, on the false move week beginning. Then we get bam, 2, 3. Then it starts to look like, oh, here's the head and shoulders. Okay? So now we have 3 bursts up, 3 new highs with little structures hidden on the inside of them. They give you this head and shoulders over here that looks like it's going to go, and then they're just aggressively trapped at the end of the week. That's why I'm so confident in this one. From being able to read the moves, from doing this homework and trying to understand, and if I leave you with anything, try and understand the moves, not just, well, they're doing this. They made an M at a quarter point, at a blueberry, and we're good. The little horizontal black lines, that is... somebody asked what these little black lines. One of the versions of the work time indicator turns black when price breaks and I think closes above or below the blue tracer. Notice it doesn't turn black over here when it's pinning. Okay, it turns black once price has broken the tracer and closed below it. So I forget which version that is, but I happen to have that version on these flashcards that I made. But that's what those are. Sorry if that was confusing to anybody. But when you're doing this, please try and understand. Ask yourself, what are they doing? Why? Like, what is going on? And try and explain. If you can't understand why they reversed at a certain area and then plummeted, take a moment to really analyze up until that point and then what happened. And that's what I see. They made 3 clear highs and then made it look like they were headed back down with this nice little pattern here, and then it's Friday. Boom, trap. Go in and then just roll over. Okay? And that's the completion of that pattern. Sans all the stuff, okay? And then the completion of that pattern with everything. And isn't that beautiful? Right back to this trap volume over here, that first middle of this structure at the blueberry. Okay, they barely missed the sweet spot that was right above this quarter point. And that's, I would have been taking off some at the quarter point, some down here, some at this middle. We're going to be talking about that, various places that off. Because you're going to find for every last pip, and that's just simply not how it's done. Okay? this was the other one that's remarkably similar to that. Okay? This is pound dollar from this year, and this previous one is euro, I think, from 2015. But they're remarkably similar in what they did and how they did it. This trap move over here at the very end of the week, again, it's Friday. We have our 3 bursts up. We have this high, then this high, then this high. It gives us 3 new highs on the H4, okay? And we roll over. This is beautiful. This is some of my favorite divergence. Again, head and shoulders divergence, or head and shoulders pattern on the RSI, while you see bursts here. Second shoulder over here gives us a baseline bounce. We go into the next week, and bam, it's just like butter through every single moving average, okay? This right here, 50-50 bounce with a baseline, okay? They even give you the last push, every single push. Look at how much, over 100 pips move from the high here to down here, and this is all it moved on the TDI. But they still gave you that little baseline bounce right there. So oh, this is that chart. I forgot I put this in. Just to show you, I would be looking at this on the 4-hour, but to show you in perspective of the H1 that where it trapped moved at that end of the week, it just broke that 4,500 by just that one candle and shifted back in, and that was right at that trap volume to the left. Okay, so all this kind of stuff, serious analysis of what you're looking at, and understanding what they're doing, why they're not breaking an area to the left, or why they're coming up into it, and they did just break it a little bit. Really understanding what the market makers are doing, that's going to be key. But I'm just going to go over into the charts. Sorry if my audio cut out there for a second. They basically did the false move on Friday. Well, yeah, I mean, there's about 8 or 9 more things in there. I hope you saw. But yeah, that was the big thing for me. I was like, ooh, I mean, these are so identical as far as, like, especially that day of the week. Okay, so someone had asked for, I think that was a. It might have been awesome, Scott. I'm glad to hear. When was that? I have the dates marked down. That might have been 2015, 04, 06. Off, or maybe I didn't. Okay, so do the hard right edge, 2015. 0406. No, 0326. Oh, that's why. Doesn't look right. I was trying to look for this euro pattern on the pound. Okay, so someone's asking, what is the chopsticks divergence? Okay. I'll just show this example, and then I'll take any questions. Typically, no. Typically, when you draw divergence, you just do this. And you go, okay, there's my classic divergence. Lower lows on the price, but higher lows on here. But what I noticed a long time ago, and Cars talked about this, he used money for it, but when it comes to a head and shoulders, it's not part of the classical training of technical analysis to draw a trend line through price, okay? That's pretty much one of the reasons I always got laughed at for it. But if you see a head and shoulders pattern like this, and you draw from the first shoulder to the second shoulder, and I'm trying to pause voice here because I know when I draw, the audio gets screwed up. When you draw a trend line from the first shoulder to the second shoulder, and then you do the same on here, you get what I looked at and I said, oh, it looks like chopsticks. So I just call it chopstick divergence. When your second shoulder, and here's the byline, okay, here's the simple explanation. When your second shoulder is lower than your first shoulder, or at parity with your first shoulder, dead even with your first shoulder, but second shoulder is highly divergent on the RSI. Now, when your second shoulder is part of a baseline bounce and you have chopstick divergence, that's gold, okay? That's just gold. Now, does anybody else see what's going on here? Okay, we get stopped. Does anybody see the Asian range there without the box? Hidden divergence is when, for example, you have lower highs on the price but higher highs on the example. I haven't seen this before. Thanks. Oh, you're welcome. I'm sorry. I thought most people were familiar with it by now. But just looking at this, and the more you do your higher time frame homework, attention to anyway, like, oh, there's my Asian range. This was the consolidation, and okay, they broke up and they did the stop hunt, and actually that was actually in the blue box, so I might have missed that, but on the H1 I can see the consolidation where they burst up. Okay, cool. So that's what I see over here. I see, man, they hit that head, they pulled away, went into consolidation, did a false. Here's another reason we don't do straightaways. People thinking that I know the 13 hasn't crossed the 50, but not everybody follows the rules. But I see the little tight consolidation here. They widen the range. They come down. They do the stop hunt low. Okay, so this is stop hunt low out of Asia, giving us a potential false move week beginning, because don't forget the false move can occur on Monday and Tuesday. And it happens to be a head and shoulder where the second shoulder is baseline bounce with chopstick divergence. Oh, my God, where do I get in line? All right? And if you're not a swinger, this is still like, wow, okay, this is that stuff that Doug was talking about. This is gold. Let me line up. Let me line up for this trade. And it could be very, all right? So that's that. That's what I take oh, that's right. Just real quick, since somebody asked about it. Here is a small example of hidden divergence, okay? And this is one of the things I'll be talking about in regards to trend trading. Let me find a better example. You know what I like for this? I like H4 2013. Great example. This is where I first noticed it. You have a trend underway, all right? And I'm not going to get too much into it. I just want you to see it. You have a trend underway. And you're wondering where it may continue, okay? Because this starts to look like a peak. But if you look at where price is rejecting, where it's failing, okay? If you draw this trend line like that, that's sloping downwards, right? But this is actually like that. This is considered hidden divergence, because typically if you're looking for a reversal or something, you'd be looking for down here, okay? And if you were looking for a divergence but the high, you'd be looking for higher highs or flat and lower highs down here. So this is it's one of those divergences that people it's not the more popular one. It's not the one most people are taught to, like, yeah, you look for higher highs and lower highs on the RSI. Higher highs on the price and lower highs on the RSI, or lower lows on the price but higher lows on the RSI. So it's actually lower highs on the price and flat or higher highs on the TDI. That's where it's hidden divergence, because people aren't, they're not really looking for that. So that's what I see. That's what we'll be talking about and discussing for continuation trades. Okay, so that's it. What I want you to do, I'm not going to be discussing anything for the next 3 weeks, possibly 4. Listen to the hell out of the old videos that I did. Go back, listen to them, absorb everything, rewatch this one, but more importantly, like, just know what the confluences are now, how to approach, okay, what am I looking for? And take the next couple days, especially because you're not trading, right, to go back in your charts and look for this stuff. Find it. It's fun. Go bar by bar, okay? If you don't have the homework helper yet, I did the homework helper when I started doing this stuff back last year, working with Marta and the Swingers Club. I just put the stuff on the hard right edge, just like this, and went bar by bar, seeing if I could find stuff, okay? Now, you don't have to do the bar by bar right now. You're just learning how to identify it, but just go through and look, okay, here, it reversed here. Let me dial down to the H1, see if I see anything here. Look, it's bouncing off this mayonnaise here. Let me go down to the H1. It's at the quarter point. Let me see what kind of confluences I can find. So look for this stuff, okay? Thank you very much, Marlon. People were yelling at me. I wasn't sure. I was like, I'm not pointing stuff out, so I appreciate that. Thank you, Robert. Thank you, Phil. All right, so before I close out here and let Joe get some sleep, are there any final questions? Thank you, George. Thank you very much, Joe. You're welcome, Patty. All right, it doesn't look like no car tomorrow. I don't know if he's not doing the pre-market session. I'm fairly certain that he is giving his DMR tomorrow, though. I'll ask, Joe can chime in on that. Thank you. Thank you. Appreciate that. Thank you, William. I always feel like I'm talking too fast. Yes, exactly, Scott. That's why we're doing the several session. All right. There doesn't seem to be any questions, so I'll Joe, just do you want to address that? Is Carr doing the DMR tomorrow night?
Yeah, Phil and everyone else, Carr will be doing his normal DMR session tomorrow evening, but there will be no London pre-market this week.
Awesome.
And Steve said, if you are foolish enough to take a trade in the next couple of days, don't you dare post it anywhere. He doesn't want to see it.
Yeah, I'll echo that sentiment. All right, thank you so much, Joe. I appreciate your work tonight, and I'll catch you later. And everybody have a wonderful weekend and enjoy the rest of your week off, your 5-day weekend. All right, everyone, take care.